So for more, I do want to bring in my next guest, as 5 of the 7 magnificent 7 stocks are set to report this week. Chris Versace, Tematica Research Chief Investment Officer, joins me with more. Chris, it's great to see you, and quantify how important these technology results are that we'll be getting these next few days.
So, Kristen, great to be with you. And it is, a very, very big week. On the one hand, we would say, oh, there are over 900 companies reporting, or 169 S&P 500 companies reporting. That's just about a third of that basket. But the real juice this week is going to be from what you just alluded to, 5 of the MAGA 7, if you will, the big 7, big tech 7. And who are they? They're going to be, starting after the close today, Alphabet, Amazon, Meta, Microsoft, and Apple. And the reason why these 5 stocks are going to be so important for the direction of the market, for what folks think about earnings expectations for the balance of the year and into 2025, is that collectively they account for about 23% of the S&P 500's weighting and about 30% for the NASDAQ. So to the extent that their earnings surprise to the upside, perhaps leave Wall Street wanting, same for their guidance, it's going to be a big influence on how the market trades this week.
So I think you bring up a good point there, Chris. And the reason that we cover these stocks so closely is because, as you referenced, they account for a quarter of the weighting of the S&P 500. Of course, a market cap weighted index. So people will see that impacted on their 401ks or their other investment portfolios. Each of these technology companies is different, but the focus on artificial intelligence has been palpable for at least 18 months now. How important is the commentary from these executives in the report on the earnings call when it comes to AI investments?
It's going to be critical. Coming into it, we've got some very good comments from ServiceNow, SAP, and other companies about AI adoption. But you have to remember that these big tech companies have been increasing their capital spending on AI, on data centers. So the crux, I think, of what folks are going to want to focus on is, are they starting to see not only AI adoption accelerate, but what about the monetization of that spending? What's the outlook for that, not only in the current quarter, but into 2025? And do they need to increase that capital spending yet again?
Even though we see stocks down fractionally pre-market, Chris, we know that we're hovering right near record highs, and the S&P and the Dow coming off their strongest weekly winning streak as of just about 10 days ago. What do you expect for markets heading into these final 2 months, knowing that October will be wrapping up soon?
Yeah, I mean, we're heading into typically what is a very nice time of year for the markets. If you look historically, November, December are very good for the overall market. I suspect that will likely be the case, but we could also get some bumps along the way. The S&P 500's valuation north of 24 times consensus 2024 earnings stretched. There is the election next week. There are reasons to think that the Fed could deliver some softer guidance for rate cuts in the balance of the year. So I think folks need to be prepared for a pullback, but that could bring an opportunity to pick up well-positioned companies at better prices.
So we'll be listening closely to AI investments, of course, from these technology names. We will be listening to it from some of the chip stocks as well, Chris. But what could actually change the direction of the market over the course of the next few months?
I think the biggest issue would probably be if the Fed simply decides that rather than delivering the 2 rate cuts that the market expects it will, it delivers 1, potentially none, Kristen, because we look at the strength of the economy, 3.3% according to the Atlanta Fed GDP Now model. Flash PMI data said that strength is going to continue into the current quarter. New order data says that November should be strong as well. Perhaps the Fed doesn't need to cut rates. That could be the biggest issue that the market has to contend with.
Interesting. So I do want to ask a bit more about the data, Chris. We are going to get that jobs report, as you referenced, on Friday. We have had market experts and economists come on this show and tell me that the jobs report Friday could be skewed because of the strikes that we've seen, including at Boeing in the past several weeks, as well as extreme weather. Hurricanes Helene and Milton having an impact as well. What do investors need to know going into that jobs report on Friday?
It's real simple. If the jobs report is meaningfully ahead of the consensus number that's anywhere from 110 to 140,000 jobs, it's going to increase the odds that the Fed does less next week, or at least signals that it's open to doing less between now and the end of the year. Remember, September was a very strong month for job creation, far, far greater than folks were looking for. Indications out of that flash PMI report is that it's only going to be down modestly in October.
Interesting. Now, of course, I referenced at the top of the show that we're just 1 week away from the presidential election. Early voting has been happening, at least here in the Northeast, in the New York area. So people have been casting their votes ahead of time. How does that factor in what we could see for stocks?
It's a big unknown at this point. If you take a look at what some of the quote smart money is doing, they seem to be preparing for a potential Trump presidency. But with the polling so close, Kristen, it's going to come down to the wire. And I would even argue that we may not know who the president is until after the Fed's policy meeting next week. That says the Fed is flying blind potentially, but I think they're going to stick to their knitting, focusing on their dual mandate.
Interesting. So in addition to the jobs data that we'll get on Friday, Chris, we have inflation data on Thursday, and we have GDP growth on Wednesday. You had made a nod earlier. The Atlanta Fed had actually upped its third quarter GDP projection. The report that we will get on Wednesday does cover the third quarter. Are there parts of this economy that are outperforming?
Oh, no question. The service side of the economy is carrying, you could say, the overall economy. The manufacturing side, given the data from S&P Global ISM, is in contraction territory. So I think when we get this next round of data, we have to, contemplate that. But we also have to read very carefully into what we're seeing for job creation on the service side. And most importantly, Kristen, because this has been a bit of a thorn in the Fed's side, inflation in the services economy.
Right. So that's what we would pay at the dentist office, at the medical office, for a manicure, a pedicure, things like that. I want to get your take too, Chris, just in terms of housing, because that's a big part of this conversation as well. Whether you're renting or actually trying to buy a home, how does that factor into growth and affordability right now?
Well, affordability has been an issue. We've seen with the lack of, supply on the market that prices have remained at elevated levels. But to me, the bigger question is going to be the timetable for those Fed rate cuts, because as they continue to cut rates into 2025, potentially into 2026, we will see mortgages come down. That could spur buyers at the margin. I'm actually bullish on the housing sector into 2026.
Chris Versace, thank you so much for kicking off the show with me. We'll check back in with Chris just after the market opens at 9:30 a.m. Eastern. Chris, of course, is the Chief Investment Officer at Tematica Research. And rejoining me as promised is Chris Versace. He is a Chief Investment Officer at Tematica Research. Chris, great to have you. And as we start this trading day together, what do our viewers need to know?
Well, the pace of earnings, as we talked about earlier, is really going to accelerate. We've had earnings this morning, McDonald's, Pfizer, but it's really what happens after the bell today with Alphabet kicking off what is going to be a very important week of big tech earnings. And as we talked about, earlier, those results are going to drive the next move in the market, as well as potentially reshape earnings expectations for the back half of this year and into 2025.
Of course, earnings do drive the gains that we see in the markets, but you mentioned the Fed policy earlier. What do you anticipate that we hear from Fed Chair Jerome Powell when he delivers that press conference just after the presidential election?
So I think he's likely to say that, we continue to see, a robust economy. We continue to see good progress on inflation, but it's what he says about the pace of rate cuts that's really going to matter most. And Kristen, candidly, the data that we've gotten so far says that the Fed does not need to cut rates, but we do have several pieces of data coming over the next few days that could influence what Powell actually says. I'm referring to, of course, the third quarter GDP print that we'll get tomorrow, inflation data on Thursday, and of course, Friday's all important employment report.
I want to get your take on cryptocurrency, Chris. I'm not sure how closely you follow it, but it's been interesting to see, especially heading into the election, that the price of Bitcoin, for instance, is above 78,000 for the first time that we've seen in months. How would you describe the correlation, or perhaps lack thereof, of cryptocurrency as it ages in terms of its digital asset territory and, of course, U.S. equity markets?
So I have to say that it's not a item that we track super closely. It is part of our digital payments strategy over at Tematica. But having said that, though, I think the big issue is whether or not the regulatory environment becomes incrementally favorable under the next administration for Bitcoin and other competing offerings in the digital coin space. To me, that's been the biggest risk. When you have something that could be dramatically impacted by the stroke of a regulatory pen, so to speak, it really keeps folks down the sidelines. If that changes, it potentially makes Bitcoin that much more of a mainstream investment vehicle. I think we could see it go higher.
Interesting. Are there any trades or stocks that you've seen that are more closely correlated, for instance, to Bitcoin than others?
No, not. I mean, I'm sure that there are. Again, it's not something that we tend to focus in on. At Tematica, we really look at the shifting landscapes of the economy, um, technology, psychographics, and other factors, trying to identify structural tailwinds and companies that really benefit from that. And you could argue that Chris, why isn't Bitcoin in there, right? That sounds like a perfect recipe for that. But again, it's been that regulatory holdback that we've been concerned about. That changes. I think we might take another look at it, most likely in the form of an ETF.
Chris, my last question to you is, with stocks right near record highs, where do we stand on valuations? And purely on a valuation metric, how much further do you think this bull market can run?
Well, that's a great question. The S&P 500 trading as of last night north of 24 times. We've only seen that a few times since 2000. And usually when earnings expectations are falling, not rising like they are for this year and for next year, it tells me expectations for the market as we move deeper into earnings, Kristen, are extremely high. A note of caution is what I would say to investors. Be careful.
Chris Versace joining me from Tematica Research. Chris, always a pleasure. Thank you so much. He's a Chief Investment Officer over there at Tematica.